Hi guys, welcome to my channel. This is Forex with Temilo. In this video today, I'll be showing you a breakdown on USDCAD. I do not trade USDCAD. If you are a subscriber of this channel, you know I trade just pound dollar and euro dollar. But I think last week when I was having a one-on-one session with my one of my academy members, he told me to check on USDCAD and do a breakdown of the pair. So I was able to do a breakdown of a sell trade on it, and it's actually got to take profit. So just analyzing the chart together, I saw a nice level of supply that I want to use to show you like an example today. So also maybe once in a while I will try and be dropping videos about other pairs because of you guys, but I do not trade these other pairs. But just so that you know, this strategy works on any pair that you decide to trade. Okay, so now this is USDCAD, and I'll be showing you how even when all your criteria are met, how sometimes you are not able to get into nice trades. Okay, so you just have to be patient because the market will always present opportunities on daily basis. Okay, so let me just cut the chart right back. So I want to talk about this sell right there. So guys, as you can see, this is the 4 hours time frame. I love to start my analysis from there, or sometimes from the daily time frame. Okay, so let's just move back to the 4 hours time frame. So on this 4 hours time frame, looking at where prices at the moment, let me quickly go back. You can see that we had this level of supply right here. Okay, that level of supply, this level of supply was left unmitigated when price moved from this price level. We had this beautiful supply with imbalance at this level, a strong one at that, and this supply zone broke structure to the downside. There was a break of market structure right there. So we know for sure that price will always return back to supply zones or demand zones that cause break of structure. It might not happen immediately. It can happen over time, in days, in weeks, even in years. Okay, but with the knowledge that price will always return back to the inception of every particular move, we will need to then capitalize on that and find ways that we can trade and make profits. Okay, so now you can see that over time market came into this level of imbalance several times. Market came twice and the third time right there, but market never mitigated this supply zone. Okay, so at this particular level of price coming into this imbalance, you could actually take valid trades as well, because one of the things I look out for when I take my trade is sometimes price may not come exactly into your demand or supply level. Market can trade from the imbalance close to the supply or demand level. So far you are able to get your confirmation entry, you can actually get into those trades. But I always tell you that try to be patient. Sometimes markets might just be using these imbalance tabs as a point of liquidity or inducement. Okay, market is trying to induce early sellers so that later on market will come and grab the liquidity that is sitting above there. So you want to really be patient, but if you get your confirmation, you can take your trades even if market doesn't exactly tap into that zone. But right now, this example I'll be showing you is when price tapped perfectly into this supply level right here. So since we've had our zone marked out, now you want to go on the lower time frame. If you choose not to take an aggressive sell entry, if you are taking an aggressive sell entry right here, this will be your entry, and this zone should be looking out for this imbalance fill as your take profit level right here. Okay, and this is about 1 to 2 hour trade. Good for you if you love to take aggressive entries. But if you take confirmation entries, sometimes it protects your capital and from getting your trades from getting stopped out, because there's sometimes market can actually take out your points of interest. So you want to sometimes wait for confirmation entries, and confirmation entries at times can also leave you with missing out on trades actually, but the pros to it are definitely much more than the cons. Okay, so now that price has tapped into our level of supply, you want to then go back to a lower time frame to look for entry opportunities. Okay, so coming on the lower time frame, once price taps into your zone, you want to start marking out your structure. Okay, so let me still cut the chart back a little bit. So seeing this right here, once market pushed into your level of supply, you want to start marking out your structure, start marking out your lows and your highs. So we can see this low broke above this high right there and pushed into this level. So we actually got a first tap into this level right here. Market then created this low, and this low pushed price up. So now that we have a new high, this will be the next low that will be looking for price to break before we get into a sell. And this push price high giving us this last high, and this when this price market was coming down, you have to wait for market to break before this low before you take your sell trade. So now let's see if that low will be taken out. Okay, as you can see, market has pushed up again. So now this low is no longer valid because now we've created another low that has pushed price up. Okay, so a lot of you might argue that this might be the next low since market has now broken above this high to give us a new high, but you want to be marking out your lows close to price. So right now, for me now, I'll move my low because this low pushed price all the way up, we came back, push price up, came back, push price up, came back, push price up, came back. This low now is the low that actually took out this previous high right here. As you can see, this low broke above this previous high. So now that is our new low, and yet again when we pushed up again, market created another low that pushed price high into this level, and as you can see, we now have a break below this low right here. So with this now, you can move on to a lower time frame in order to look for zones where you can take your trade. Now you'll be looking for after this break of structure happened right here, you'll be looking for zones, a supply zone or an imbalance level where you can possibly take your trade from. And as you can see, when market took out this low right here, this level of supply was left behind right there with little imbalance as well. So now this zone becomes a valid zone to take your sell trade from. So sometimes you might want to take your trade from the imbalance level as opposed to waiting for the supply zone. So at this level we have imbalance right here, so you can take your entry from the 50% of this imbalance, and your stop loss will be at the last high in the market so that your trade can be well protected, because price sometimes goes very deep into your supply zones okay. So now this will be our entry if price should come back into this level. So for your take profit now, you want to return to a higher time frame to look at possible zones where you can take your profits from. So most times as a day trader, you want to look for 1 to 3 hour, 1 to 5 hour trades. You want to be in and out. But if you are a swing trader, you can look further to see zones where you can actually swing your trade into. So now I can return back to the 30 minutes time frame to look for take profit zones. So as you can see right here, we are just looking for a 1 to 3 hour trade. So markets, being that we are likely getting a very good entry right here, we might actually have the opportunity to take more than a 3 hour trade. So as you can see right here, market left behind this huge imbalance when price was pushing up into the side. So these zones will likely be zones where I would love to take my profits from if I was to trade this pair on this particular day. Okay, so we have stop loss about 6.1 pips in stop loss and a risk to reward of about 19 pips. So I usually don't like to take profits so close into a demand zone or imbalance field, because sometimes price might reverse back. So I always want to go on a higher time frame and choose a best price level where I know market will definitely get to before reversing. Okay, so let's just have this right there and go back to our lower time frame. I think we were on the 2 minutes time frame the other time. So at this level right here now, let's see if we will be tapped in. As you can see, market came back into this zone and we are in the trade right there. Okay, so now all we need to do is wait for market to come down into our take profit level. Okay, so now you can see that even when our analysis was correct, you can see price took us out of this trade. So with this now, we have 1% out there. Okay, so I'm showing you this example because not every time the market is juicy for you to get when all your criteria are met, that you get nice entry and the market will start going down. Okay, so now we know we are still in this supply zone and we are still looking for an entry. Now we've created another high right there. Okay, and this low was now responsible for that break of structure to the upside. So now we now have this break of structure happening already right here. So now you want to look for zones that cause this break of structure, and I can cite this supply zone right here, and just above it I can also cite this imbalance right here. Okay, so in order not to miss out on this trade, I would likely get my entry at this level right here, but because of this imbalance that is here, my stop loss will now be at this level right here. Okay, and still targeting that same take profit zone that we have from the higher time frame. Okay, so now we've taken one hit right there, so this will be our the second opportunity to get into this trade right here. Let's just use the midpoint of this imbalance to get into a trade. As you can see, we've broken this structure and market has now pushed back up, and market is here to tap into our point of interest. Let's move to a higher time frame. So on this time frame, we can even refine our entry very well to this level. So this is why I always like to go from time frame to time frame to have a clear picture of what is going on the chart. So at this particular point, this will be my entry opportunity for a retest, and let's just see. Price come to my zone. You can see now on this particular day, market has closed. We are now in a new day. So coming to this particular day now, I'll be waiting for the London session so that when price comes out from this Asian session, I know liquidity already lies above this level right here. So I'll still be looking to take a sell entry from this zone right here. I might even move to a higher time frame and still look for a better zone in order to get into this trade. So we have a break of structure here, and you can see market has even taken out more lows. You can see market has taken out more lows. So on this particular time frame, let me refine this imbalance, and I will take my entry from the 0.5% of this imbalance right there. So stop loss still at this high. So let's see, will market take out that Asian range high during the market session, or will it just go all the way down? As you can see, market is pushing down, and our entry is still not tapped. Okay, let me increase this. So yet another day, market kept creating more and more liquidity in the market. Another Asian range high. At this particular day, I'll still be optimistic that price will come and take out these two Asian range high. Let's see what market will do. You'll see that market has now gotten to our take profit, and we were unable to get into this trade. We took a loss, and still our point of interest, our entry was not tapped. So this is to show you a clear picture that there are times where even when all your criteria are met, you still don't get a trade. You can see this massive move that we missed out on just because we stick to our rules. This was it on this sell trade. Nice trade, but we couldn't get an entry opportunity. Okay, so let me now show you a trade that if one should miss out on this trade, there's now another trade that one could have gotten into. So at this particular point in time, you can see the market traded into this level of demand right here. So at this particular zone, you can actually start looking for buy trades, because when market was pushing down from this zone, market left behind imbalances at this level. So we could actually, if we get a confirmation entry from here, we can actually still get into buy opportunity. So let's see if we will be able to catch a buy trade from this demand level. So on this particular day, when price tapped into this zone, it was already past our trading hours, because we only trade London and New York session. And as you can see, when price came into this zone, it was already close to Asian session. I will be sleeping at this particular time. So coming to the chart the following day during the London session, all I'll be waiting for now is to see this Asian range low taken out, because whenever I want to take a buy trade, my criteria to look for is, are we trading from a demand zone? Is my Asian range low taken? And then is there a break of structure? And as you can see right here, market is now moving towards this Asian range low. Let me just increase that. Let me move to the 15 minutes time frame. So as you can see, yet again, market went all the way up without taking the Asian range. So no trade at that particular level. So this is another day. We are now in another session now, London session. We have a new Asian range low. Market still pushing up, and yes, a buy trade has occurred, but couldn't still get into a trade because our criteria is not met. We are not bothered and we are not worried, because we stick to our rules. Okay, so you can say how it means out on big trades. Okay, so now market is now back into this zone. You can see why patience is really important. You can see market is now in this level of demand, properly mitigating this zone. So at this particular point in time now, for us to take, this is now a London session, And for us to take a buy trade, we need price to be reacting from a demand level. Yes, market is reacting from a demand level. We need to see our Asian range low be taken. You can see right here the Asian range low that we have is being taken on this particular day. Not only was this taken, this previous Asian range lows was taken as well. So all the liquidity that was lying right here was swept out with this push into this demand level. Okay, so the last thing now we are waiting for is to see a break of structure from this level right here so that we can get into a buy trade. So now we want to move to a lower time frame and start marking out our structure. And as you can see right here, this is the last low that we can see when market was pushing back up, and this high was responsible for this push into this demand level. So for us to take a buy trade now, we need to see this high being taken out, so we know this zone is valid. And as you can see right there, this zone has now been taken out with that wick right there. So now the next thing is to look for a zone within this level where you can take a trade entry from. So when price took out that low, we have this imbalance right here, and we also have imbalance being left behind at this region. So this area was completely filled. So now we can either take a buy trade from this level, but remember we have this zone, so our stop loss will be at this swing low right here. So let's see if we will be tapped into this trade. And for our take profits, all you need to do is target imbalance level and have 1 to 3 RR. So we can see the market left behind this Asian range high, and just above it we have this supply level that is yet to be mitigated. So this zone will be our target area, and we have our 3 RR, 1 to 3 RR right there. Okay, so now let's play, and we are in the trade. Okay, we are now in the trade. So let's see if we'll make profits or we'll get stopped out of this trade. So market is back into this level again, and market is moving beautifully up, and as you can see, our take profit was it right there. So don't be mad at yourself when you miss out on trades, because sometimes missing out of trades can even be a blessing for you. It's better to take few trades and be profitable than to take lots and lots and lots of trades and not be profitable and be losing your capital to the market. So you can see we lost 1 RR right here, but at this level we're able to make our 1% back and even still make extra 2% profit from this trade right here. So patience really helps while trading. Okay, so guys, that will be the end of this video, and till next time, I hope you are able to gain something from this particular video. And please let us all be patient while trading. Patience will really take us far in this career that we've chosen.